Cryptocurrency has become one of the most talked about investments in recent years. And if you're nearing retirement or already retired, you might be wondering if it's a smart move to include it as part of your diversification strategy. With inflation, rising costs, and market uncertainties affecting traditional investments, it's becoming increasingly important for retirees to explore alternative ways to safeguard their wealth. But here's the catch. While many of us are familiar with Bitcoin or Ethereum, there's a lot more to cryptocurrency than meets the eye. As a retirement tool, it can provide a hedge against inflation, potential tax advantages, and the possibility of outsized returns. In this video, I'll break down why you should consider cryptocurrency as a diversification tool for your retirement and how it could play a role in securing your financial future. Before we dive in, I want to quickly mention that if you're serious about protecting your wealth, particularly if you have over $100K in your IRA or 401K, or even more than $5 million in savings, I've got a free gold IRA guide that's helped thousands of Americans. You'll find the link in the description. It's worth checking out, especially if you're serious about securing your wealth for the future. Now back to cryptocurrency. One of the first reasons to consider it as part of your retirement strategy is the potential for diversification. If you're like most retirees, a significant portion of your retirement savings is tied up in stocks and bonds. While these are traditionally considered safe, they're not immune to market fluctuations. Cryptocurrency, on the other hand, tends to move independently of traditional assets. That means if the stock market takes a dip, your crypto assets could remain stable or even increase in value. But diversification doesn't just stop at different asset classes. Within the crypto market itself, you've got options. Bitcoin, Ethereum, and even newer coins all present different risk and reward profiles. By holding a small portion of your retirement portfolio in various cryptocurrencies, you can spread your risk and possibly tap into the higher growth potential that traditional assets just can't offer. Let's talk about inflation. We've seen prices rise, and as the cost of living continues to increase, the purchasing power of your savings diminishes. Cryptocurrency, especially Bitcoin, has been referred to as digital gold because it shares many of the same characteristics as physical gold. It's finite and can act as a store of value over time. While Bitcoin and other cryptocurrencies have been volatile, they've shown strong long-term growth potential. And if you've been concerned about inflation eating away at your savings, diversifying with crypto could help hedge against that. However, I also want to remind you that as an American retiree, it's crucial to protect your wealth with the most reliable, time-tested assets. And while crypto can be a part of that, nothing quite beats the security and stability of a gold IRA. Gold has been a safe haven for wealth preservation for thousands of years, and when you pair it with crypto, you're covering all your bases. A gold IRA allows you to hold physical gold in a tax-advantaged account, making it one of the safest ways to protect your savings from market volatility, inflation, and economic uncertainty. Now, if you're thinking about diving into the crypto space, one thing to keep in mind is the tax treatment. Unlike stocks or bonds, cryptocurrencies can be taxed as property, which means you could face capital gains taxes when you sell. But if you hold your crypto in an IRA or another tax-advantaged account, you could potentially defer taxes on your gains, much like you would with a gold IRA. To be clear, I'm not suggesting you pour all your retirement savings into cryptocurrency. It's a high-risk, high-reward play, and you should approach it cautiously. But having a small, strategic allocation in crypto within your broader retirement portfolio could provide you with an extra layer of growth potential. Before I wrap up, if you want to make sure your retirement is properly secured, especially if you're managing a significant amount of savings, I recommend checking out the free Gold IRA guide in the description. It's specifically tailored to American retirees with $100K or more in their IRA or 401K. And it covers everything you need to know about how to protect your wealth using gold IRAs. At the end of the day, cryptocurrency can be a valuable diversification tool, but it should never overshadow the importance of securing your wealth with more traditional, stable investments. Gold IRAs continue to be the best option for retirees looking for long-term wealth preservation. If you're ready to take the next step in safeguarding your retirement, check the link in the description for your free guide and get started today. Remember, this is especially important if you have more than $100K or $5 million in savings. Don't wait. Take action today.